Liz, priced for the consumer to have a rollover.
No, and I think that's obvious. Every time we get a piece of bad data, whether it's on trade or the consumer, the market doesn't like it, which means the market was not expecting that bad data. And then I want to go back to the point about the Fed. Can the Fed actually do anything? The Fed can provide a confidence Band-Aid here, but that's it. I mean, companies aren't spending, they're lowering capex, they're lowering guidance. That's not because they can't get good financing. I mean, money's been cheap for 10 years. It continues to get cheaper. They're not hurting for cash.
Yeah, I think the recession thing, too, and Steve will back me up on this, really important point for the viewers. It takes 6 months, 2 full quarters, before the NBER will even say, in fact, we are in a recession. And by that point, historically, you're already past the halfway point of the related stock market sell-off. So when we know for sure, yes, it's a recession, and I'm not saying it's definitely happening, but when we know,
there would have been a sell-off presaging all of that.
You're already through some of the worst of what you will see in the stock markets. This is a really important point, that it's not a coordinated thing. We're starting a recession today, and then the stock market first starts to sell off. You will know we're on the way based on market activity.
Are we buying into Josh's point of view that a bounce is in the cards, Doc?
Yeah, I believe that a bounce is in the cards.
Are you doing anything to reflect that agreement?
I've bought very, very short-term calls. I've bought calls that expire tomorrow in the S&P.
He's having a special hat made.
Having a special hat, special ring.
We're 400 points off the lows.
Ring made, Josh.
Like, I'm not.
Isn't this whole thing Groundhog Day?
Sure
I mean, don't we trade between this band of 2,700 and 3,000?
Yes, we do.
And we wake up every morning like we've never been here before, but in fact, we have been here before. I got you, babe.
Well,
right?
I feel like you're giving away the premise of the show.
6 a.m., the whole thing.
No spoilers.
The reason is we can't.
I feel like it's insanity.
Well, investors do too. We can't get too optimistic because the economy's slowing. You can't get too pessimistic because there could be a deal on trade, which solves a lot of the uncertainty, which is causing the market to go nowhere over the last 18 months.
I will say this, guys. Just take a quick look. To ease everybody's pain here, I put together a chart of the ISM services and the manufacturing index together. I look at this all the time, but I've been unable to convince the market that the service index is more important than the manufacturing index. They always trade on that. Guys, I don't know if you have it in the back. What you'll see is it looks a lot like it did in 2016, okay? I guess they don't have it. I'm sitting here. They don't have it. That's cool.
Talk about it anyway.
It was down here, below contracts for a couple months, came up, running along pretty well. By the way, it followed down the oil price, right?
Right.
Some of the weakness we have right now is oil, Boeing, farm machinery. That's some of the areas. So very sort of specific things, and the trade issue. And now it's down below, same thing, okay? So it looks a lot like 16 when we bounced back. Also looks a lot like it did before 08, 07 when we went way down on that issue here.
We got to go.
Okay. My only point is earnings were accelerating. S&P earnings were accelerating 16. Now they're decelerating. It's a difference on the valuation of the market.
All right.